Hello everyone. Today we will discuss 4 methods of trading on financial markets to make profits. There are actually only 4 methods of trading on financial markets, and let's discuss all of them. The first one, the one that is used actually by everyone in the beginning, it is intuition trading. Opening trades by luck. Like if you're lucky, you win. If you're not, okay, it happens. Most traders open their first trades based on intuition. Remember yourself, like they are opened usually emotionally. It was like, wow, it's going up, let's buy. Oh wow, it will reverse for sure, let's sell. Okay, but once or twice we can be lucky, but in a long term it will not help us to make profits. And obviously, you should not trade like this. The second method, usually used by traders later on, is level trading. If you were taking any courses of forex trading, most probably they taught you to identify support and resistance levels and put pending orders based on those levels. This is the simplest trading system. Or they taught you just to find the trend and open the trades based on the trend. Very simple and elementary. But what is the problem associated with the levels? Here you go. So we have the level here. And we open buy trade, where we usually put take profit. How many points? Like 200, 300, maybe 500 sometimes. But usually it is 200, 300 points. It is take profit. So if the price goes up, goes to our direction in this case, we will earn in the best scenario 200, 300 points. And if the price goes against us, what will happen here? Until what level the price drops. So if the support level is broken, the price is gonna drop until the next support level. The next support level, and how many points we may have here until the next support level? Usually. How many? For instance, on euro-dollar. It is an average 1000 points or 1500. So what do we have here? We have plus 200, 300 and minus 1000, 1500 points. So the principle of balance between risk and profit is not applied here. So this is the disadvantage of trading based on levels. Yes, it can bring a lot of profitable trades. Yes, it is very simple. But here, the potential profit will always be less than potential risk. That's why the trading statements of traders who use this strategy and trade like this usually look like this. Plus $5, plus 5, plus 10, plus 5, plus 10, so on, so on, so on. And then minus 500. Did you have such experience? Those who trade already for a long time most probably went many positions with small profits and then a huge loss. So this is the trading on simple trading system. So what's the next step of the trader? So he used these above 2 methods, and the next that he is starting to using, it's indicators. It's trading used on indicators. He's taking like moving averages, MACD, oscillators, RSIs, stochastics, and others, and he's building his trading systems. And he's working combining them. Such trading is quite simple. It gives the signal to buy, we open buy order. It gives the signal to sell, we open sell order. Red lamp is buy, green one is sell. You don't need to think at all. It's enough to calculate profits and risks, and you don't need to think at all, just you trade. But what is the issue? What is a trading system? It is the summary of strict rules of system of trading. You should be stuck to the signals concerning sell, buy, or profit fixing. You cannot be flexible, you cannot move. You should be stuck to the rules. How to distinguish the trading system? Like, if you can make expert advisor for this trading system, if you can write it, so it means you have a trading system. If no, so you cannot write expert advisor for this trading system, so it's meaning it's not a trading system, it is something else. Surely, strict rules, they can bring results, but the market is not stable. It changes all the time. Volatility changes, trends change, and the news influence change. And imagine you had a trading system that was perfectly performing on a trend. You had high profits, and the system was getting very, very good results. You're getting bigger and bigger profits. But the market changed, high volatility and the flat channel occurred. What is happening to the good trading system that was perfectly working on a trend? It's an extreme situation for it. It will not work anymore. The same situation happens with the expert advisor. It was fine on a trend. As soon as the flat market appears, it stops performing. It used to trade here, while here the simple doesn't know what to do. So very often, what's happening? Traders, they used intuition, then switched to level trading, then moved to trading strategies, and then again something is wrong. He was making profits for 2-3 months, and then all is collapsing. And then he makes a conclusion. To make profit on market is impossible for me. I can't make it. I will go back to my usual job, to the factory, or to the office. There I will get my salary guaranteed every month. It's easier. It's simple. So I will get my salary guaranteed. But the thing and the issue here lies in that the trader actually had to do only one more step to get the victory. He was very close. So the fourth trading method, or the fourth trading level, is using of a trading strategy. Yes, maybe it's not very clear now. Trading systems, trading strategy. What is the difference? Actually, it's quite simple to identify and distinguish them. Like in other sessions, we will learn how to identify trend and how to search for support and resistance levels, how to work with Fibonacci. We will not make it very detailed, but we will try to do in common, so on charts, online, and I will answer all your questions that may appear. All the above, including trend, indicators, levels, all these are components of the trading strategy. Look, we do not rely on intuition only. We do not use exclusively the specific levels. We do not use strict limits of the trading system. We look at the trend, we check the levels, watch the indicators and Fibonacci lines. We aggregate all these together, look at the whole picture, and make a specified summary. Trading strategy differs from the trading system by the absence of the strict rules. Of course, there are rules, but they are flexible, they are smooth. So since the rules are flexible, the trading strategy is able to adjust to the changing market condition. When the trend changes, we change a big trading strategy. We were buying and later we will start selling. When the flat market appears, we are taking upper and lower boundaries of the range and use buy, sell, etc. We wouldn't say that trading strategy is a magic pill to become profitable. and so you will be only profitable in trading if you use this strategy. Surely no, but the trading strategy is much more sustainable than any trading system. For instance, there is volatility change on the market, so the trading system will not work, while the trading strategy conforms to the transforming market situation. So for today is enough, and we will continue on the next webinar discussing trading strategies. Hope see you again. Bye.